Yo, what's up, traders? What's up, traders? What's up? How's everybody doing tonight? Sorry I was a little late. Had a couple of things going on. Nvidia, we got to talk about it. We got to talk Nvidia. We'll talk Fed minutes. Um, don't have really a script to go by tonight, so I figure we'll go over the S&Ps. We'll go over the Qs. What does this earnings mean? What does it mean for the overall AI sector? We're a lot of opportunity. Like I said, I've been saying this since Thursday. Wednesday, Thursday, and Friday. Thursday and Friday were the two major days that I felt that it's going to be on. So I want to help prepare you for that. All right. First thing I want to say: this is not financial advice. I am not a financial advisor. You should go see one. I would recommend it. This is what I do with my own money. I'm not telling you to buy or sell a security. All right. Let me fix the comment section here. All right. So, as I was saying, I think we have a lot of opportunity, guys and gals, if there's any girls here. Um, I was going to have something like already up. Again, I was kind of having some trouble with my camera, but like it just came on. So I don't really know exactly what's going on with it. Like I can go to into Microsoft settings and it's there. So I can bring up OBS. So it's there. There is no problem. But it's just weird when like the light's not on but this time I brought up OBS and then the lights came on. So we're good. We're good there. Um so we had Nvidia. We had Nvidia earnings. Okay. Nope, I already have it up. You can go back down. All right. So this is actually the Fed minutes. We can go over this. There's some currency stuff here. Okay. We can go over that. I still need to read over it a little bit. I haven't read it yet because it was such a non-event that we expected. We expected it to be a non-event. So if you're like, how did we know? Well, you don't know, all right? And that's what I said. You don't know. So we've had pretty much a vast majority of Fed members already speaking, but you got Powell. You had Powell and Ben Bernanke. And if you guys don't know who Ben Bernanke is, Ben Bernanke was the Fed chair in the 2008 financial crisis, okay? Um, they got together, they had a thing together. So we kind of got we got the feel from Powell, and that's ultimately what matters. Now he doesn't just do what he wants to do. They all come into an agreement. Um, so I want to read over this. I could read over it before I go to bed tonight. You guys should read it. And this is why I haven't read it yet because, like I said, we called that this was probably going to be a non-event, and you had a lot of people, use this to possibly sell you things or do this and that, but we knew it. We knew it, guys. I mean, again, we didn't know it. What we said was, unless there is something that is unexpected, chances are we're already priced in for it. And even though it's the minutes, that's the thing too, is like if something happens, they can change it a day or two before. They can change what they like. You could have a couple businesses go out next week and they might start talking about cutting depending on what kind of issue they have if they can't come to some kind of resolvement with it. Now, you know what they did with the banks. What they did was with the banks was they put a backstop on the banks. So they're matured, their bonds that they held, okay, they're longer term bonds. What the Fed did was pretty much say, you don't have to cash this out. We will lend you the money, okay? Because at mark to market value, they would have taken such a huge loss. A huge loss. All right? So that helped. That seemed to have helped. I keep reiterating this, but we had Janet Yellen. Janet Yellen, Friday or Thursday, said, we need more mergers to provide more liquidity. So maybe they know something. They obviously are talking amongst themselves to, I'm not going to say the fat cats because they're not the fat cats. They're good at what they do. They're very good at what they do, and I have a lot of respect for them. So I mean, they've raised margin requirements. If you don't know what margin requirements are, you can look at it for things like trading. Like if you want to go short on a margin account, you have to meet an excess amount of capital when you're in a trade. That excess of capital as well, if you're down on that position, you may have to put up more money. But basically, the margin requirements, like what the requirements are, how much are you being lent to put on a position. So that's what margin requirements are. It's like if you want to, I'm just going to throw out numbers. Like if you want to short 2,000 shares of so and so, well, they may ask you to put up 20. They might ask you to put up, you know, whatever. You know, if you want to short 2,000 of whatever stock. Okay, so 6 months before it could have been 1,000. I'm sorry, it could have been 20,000, 25,000, whatever. This time it might be 30, 35, or 24, 26, 25. Like, you know what I mean? So they've raised capital requirements for the banks. Again, I'm not a banker. This is not financial advice, but that's just the gist of it. What it allows them to do is it provides security that the person that is leveraged and puts on the position has the capital to maintain it, so that if something were to go wrong and all these other people that are also leveraged, because that's what a lot of people do, and a lot of people don't know this. A lot of businesses use leverage to make money. I mean, Apple, for instance, guys, Apple doesn't pay payroll with their paychecks. They pay it with bonds. So that's in an accident, you know. I'm going off on a tangent here. Anyway, so they've raised margin requirements. If you don't know what they are, do your research, you know, do what you can do. We all have the internet. Just do your research. You do your research on anything anyone tells you. All right, so we're going to get into charts. We had NVIDIA earnings. Do you know NVIDIA is trading at 100 and sometimes earnings right now? That's insane. But they are the cream of the crop. NVIDIA is the cream of the crop. I give it to them. Man, I mean, let's just bring up a chart, guys. Let's bring up a chart of NVIDIA and the opportunity that each and every one of us all had to buy this thing back in 2020 and 2021. All right, I'm going to bring up the daily chart. I mean, just NVIDIA alone, you do the math. Let's say you bought right here. Say you bought here. Where am I at? Oh, no. Oh, shoot. Sorry, guys. So just say you bought up here, you know? Let's just say you bought up here off the test of a 200-day. And you get these down days here, and you don't know in the mix of time. But at the end of the day, the Fed was providing liquidity. They were providing 120 billion in assets a month. If you listen to the news and you really didn't understand what was really happening, you could have just bought calls. I mean, this right here was the greatest transfer of wealth for anyone that had hardly any money. You could have really set yourself up good. So my point is, say if you bought over here, and you sold right around here, or you're still holding it. How about that? You got to think too, guys. You want to get these stocks at a good price and stuff. So what happens is they will go, like Nvidia's at $305. Who's to say when they're at $500, $600, $700, how much is the company going to want their share price like that? Because they're going to want people to be able to have access to buy it, because the market is a place where a company goes to raise money. And in exchange of raising money, they issue you a ticket of ownership of that company. That's what a stock is, if you may or may not know. All right? So what happens is they could just agree upon, like, we want to do a split, So that means you got shares at 300. They do a 4-to-1 split, or they do a 3-to-1 split. We'll make it easy. They do a 3-to-1 split. The stock's at $305 right now. All right? That means you're going to have not one at 305. You're going to have 3 shares at 105. And what happens after that? You give it some time. Now, this is if the company does well. Nvidia doesn't seem to be going anywhere anytime soon, unless there's somebody that comes along and just for some odd reason has a better product. But of that, I don't know about right now. So, anyway, what I'm trying to say is, it gets to a certain point where it gets expensive. Like anyone that's, we'll say 40, 35, 50, 60,000 a year, who wants to pay 600, 500, 700 for one share? Okay? That shouldn't, honestly, that shouldn't, it doesn't hinder me from buying one, because your percentage gains on that are going to be, you get 4%. Well, 4% of 300 is more than 4% of a $12 stock. A $12 stock goes 4%. You know what I mean? So you got to look at it that way. So anyway, back to the point. They want to issue money to raise capital, and there was news on their last earnings that they did want to. I think they wanted to raise some money, and I didn't look into it. I don't know if there was a company they were buying out or something they wanted to do. I don't know if you guys remember that. I'm sure you do. Nvidia did do that. I think on their last earnings they said that they were going to raise some money. Um, so back to the point again. Sorry, I have ADHD. Now this stock price gets so high, right? They want to raise money. They want people to be able to take ownership and buy shares so that they're able to take that money and continue to grow. All right. It helps sometimes, depending. Let's say if we're in crazy interest rates, they'd much rather go to the equity than the bank or whatever. Different ways. I'm not a banker. I'm not an M&A. An M&A is a merger and acquisition. I don't specialize in all that stuff. I know how to read charts. I know how to read charts. I know how to read price action. And I know how to use the tools to tell me what I'm doing, to help guide me, I should say. So what they'll do is, let's say we go up five, six, $700. They do a stock split at 300. Say they decide to do one. You now have three at $100, and then what happens? That growth continues. You get to three, 400 again. They do another one. They do another split. Now you own six. Okay, you have six shares at $100, and then you just keep going. Now this does not include the dividends that they pay, and you do this for a good period of time. All right, you average your costs down, possibly keep buying, throughout those times, and you just accumulate shares, and then as it's rising in price, obviously, like I said, in time, maybe they do a split. Maybe they don't. Look at Chipotle. Go look at the price of Chipotle. So that's why it's. I just wanted to touch, like, that's why it's important to not only save your money, but in order to get ahead, if you have money to save, this is not a financial advice. I'm not telling you what to do with your money. I'm just telling you what I like to do with mine. You know, just there's ways to save it. I'm sorry, there's ways to save it, and I would, think about that. I'm not going to tell you sit here and buy it and what to do with your money, because I'm not a financial advisor. I'm not. I'm sure I can get in trouble for saying that. As a matter of fact, I know I could get in trouble for trying to tell you what to do with your money. And that's not what we're here to do. We're here to talk about earnings and what we expect for tomorrow. All right. I'm going to review a couple trades. We can do that first. If anybody has any questions, pop them in the chat. Any charts you want to go over anything, want to ask me anything, fire away. I got to do something real quick. Excuse me 1 second, guys. Oh shoot, I didn't have my mic on, guys. Um, let's look at. I'm just gonna look at futures real quick. I'm gonna look at futures real quick. Uh-oh. I mean, I don't know if this means anything or not right now because they haven't done it. Okay, they haven't done it. So I got a news source here that says, all right, now I got to click in it and find out what exactly it's all about. Debt ceiling standoff fallout. Fitch rating puts U.S. AAA rating on negative watch. So what's that mean? What happens if the United States, you know, gets their credit rating downgraded? What does that mean? That means that in order for them to raise money, they have to pay more. They're going to have to pay more in interest. So, I mean, it's just like you and I and anyone else. The lower your credit score is, the more you're going to pay in interest. All right? So, that is why it's not a good thing. There's a whole... And what happens is let's say they don't pay their debts, or if they, do something, that has a trickle effect in other countries that depend on that payment for them to pay their bills. So there's a big circling effect here, and this is why it's a big deal. It's why it's a big deal. Now, you guys can do a lot of research. There's a lot of places you can go to and learn about this, and it's really cool to know how things work. And they don't teach this in school. I don't understand why. They don't teach this stuff in school, guys. And it's fun. Like, I never knew about this. Like, like I say all the time, this is the closest thing to being a doctor without having your doctorates. You get the information, and you got to put the information together. All right? First, you need to learn how to read the information. That's very important also. All right? The information that we've had all week, or that I've had, that we've all had, really. I don't have something that, like, I don't have a terminal or anything, A terminal makes life a lot easier. And I'm sure there's a lot of things in there that would take you forever, or you would have to pay to see, different positionings and all kinds of stuff, They got shit. They have, you can locate where all the ships are in the world. Like, they have that. They have so many stuff. It's insane. So anyway, I don't even know where I was leading off at. So go online. There's a lot of places you can go to and just read and get to familiarize and get educated on. Get educated on how this world works. How the game is played. It's very important. So we had NVIDIA, we had Snowflake earnings. Those are the two main ones I want to touch upon. We'll go over the charts. We'll go over some things for tomorrow we're going to get volatility in those AI space stocks. AMD, NVIDIA, AI, the small cap ones. There's a whole list of them, and we'll have to go through them. So, So what this said was just something about on negative watch. So for the debt ceiling. So they got to come to agreement because that's also there. They could wait and just, they could go and maybe, I don't know if they can do that. I don't know if they can do this. I just have heard on TV and other sources that they could probably get a downgrade if it takes them too long to come to an agreement, So they need to just sit down and just get it done, get it over with. Just get it over with. Just get it done, They're trying to wait to the last minute so they can be, so they could use that as leverage, Maybe we should put a credit rating on things like that. Maybe they wouldn't wait, They would be more worried about it, and they wouldn't be worried about leveraging themselves for these deals. But I get it. That's how the game works, This is money. This is money that gets spread out all across the world, not just here. So yeah, that's what we'll do. I'm going to go over... We can go look at futures real quick. I'm already on them. So, let's see. I took a trade on the SPY, Apple, and I think I made a third one. I can get into risk management also. I definitely had used some risk management in this Apple trade. We'll get into Nvidia, what is like, are these AI stocks tomorrow that are in play, which I can also get on a risk management um, lesson on that. I can just say it now. So tomorrow, when these stocks, if they squeeze or if they get sold off, if they break these levels and start ripping higher, guys, girls, I'm gonna relate this to me on Fed Day. All right, you know how we get a lot of volatility on Fed Day, okay? You don't need to position yourself the same way you do on a high volatility day, because you're going to get paid just as much, if not more, with smaller amount of dollars, because the volatility is just going to be rampant and they're not going to know where to price these things. And if you do trade tomorrow and you get a nice move in your direction, take pieces off. Sell into strength, buy into weakness, okay? My trade here, real quick. The S&P's double bottom, boom. Literally tried to make a short. I put this out here. I put it out in the world, all right? I had actually mentioned this setup. I was looking for like a longer, like an intraday, maybe 2-day setup for this. Like catch it like in the afternoon, catch it overnight, and then the day, if you know what I mean. So I was thinking more of a 2-day trade, to an extent. So right here, all right, literally right here. I'm gonna open my brokerage account real quick in a second. I'll give you guys the times. But we hit this, and what did I do? I took it off because I knew this is resistance. I took my profits. All right, I took them. We were struggling all day, and once we got through this tail and we got above VWAP, all right, I was taking profit off, because you have to. You have to take profit off. Look what happened. It reversed. Who's to say that you could not withstand this, or I'm sorry, to pull out your green and then it pulls back on you, all right? Only because that's resistance and that's what's going to happen. And you think it's just pulling back and you're like, damn it, it's going to sell off more. And you start thinking and like you just overcomplicate things because you didn't sell into weakness or sell into strength, all right? You're going to start thinking your trade might go red, because this was a quick downturn. If you didn't take anything off, I'm sure, and especially if you were trading options, that premium got 8. That thing got 8. You're at the end of the day. Not only are you at the end of the day, the time in which it moves matters. All right? There's a couple lessons that I have that I'll go over later on about price movement going and then completely, like, in the manner of which just rejecting off of a level is a story in of itself, okay? Now, you could be thinking here, this is where psychology happens, okay? Especially if you're sized up, and you should not be sized up. Should not be sized up, okay? No reason to be sized up here. There's no pattern. There's no news, nothing, okay? You get down here and you're like, man, I'm red now. And then you start thinking, is this going to go lower? Are we going to put in new lows? We rejected up there at a resistance area. We only touched it. We tailed off of its resistance. It's going to pull back. So I was a seller into here before this level. I was selling into this level, guys. All right. So on this pullback, if you were still in this trade thinking, it could go longer, if you were too sized up, you were probably thinking about selling and wondering if it's going to go lower. Is it going to go back? Well, it did go back. It did go back. But look at the volume on this sell-off. I mean, if you're a trader that puts pieces together and you have an education and you know what you're doing, and I'm getting a course that is a hell of a lot cheaper than anything out there, and I don't sell you in any other type of things like, well, we have this, we have this, we have this, we have this, and making yourself give reasons. That's just a sales pitch, all right? Now, you need to trust whatever you do with your information, okay? There's a reason, probably a reason why other companies that are able to give you a lower price on the same product as if you were able to pay for it. Like, you're giving something up, all right? Keep that in mind. All right, so, yeah, we did take that trade on the S&P's double bottom, but there was more to it than just that, all right? More to it than just that. Oh, yeah, my one red trade, I don't even know if it was red. It might even have been green. I might have been red on the cost of commissions. And no, I was not sized up on it because it's like there's no reason to be sized up on these ones that I was in. Now, Apple, I wasn't in max position size. I was in about half of it, you know. I was in about just maybe even a little under half. So, yeah, I just hope, selling the strength. We very well could have rejected. You could have got news. Look at that volume. You were definitely worrying if you've seen this volume bar. What's it look like on other time frames? Not sure what everybody uses. So look at that. Just clear, cut, and dry. Sellers are in control. Or this is all the people that just kind of went long on that and it pulled back on them because they didn't take profit and now they're selling positions because they don't know if it's going to put in new lows or not. It's the psychology. You have to understand the psychology. Psychology of the market is so important. It's what dictates winners from losers. And you need to learn how to win right to be a winner. You have to learn how to lose right to be a winner. All right? It is the most important thing is to lose right. Learn how to lose. All right? We can teach you that. A little bit comes with time. You need to know what you're doing. You need to know what price action is telling you, what your tools are telling you. All right? And I'm going to tell you, like, I used it in the S&P trade. This is what allowed me on my one loser to be like green but red because of commissions. Okay? So that's losing right. All right? The name of the game is you need to win when you need to make more when you're winning and lose less when you're wrong. That's the only way you're going to make it, or you're going to get cut by 1,000 paper cuts and you're just going to be like, because you took it, you didn't, I try to instinctively, whatever my body's telling me, I don't overthink it. I just know. And I'm like this just happened so damn quick, guys. I'm like, shit, give me that. I'm going to take that because I know there's resistance right there. We may not get above it. The fact is that there was no catalyst to get above it also. That's another thing. What is the catalyst to get you above a resistance level? What's the catalyst to bring you below a support level? All right, is it good? Is it bad? Those are things that you need to know. All right, we go into a resistance level, and you're right, we sold right back off. We did recover, but there's no catalyst here, really. The only catalyst is we've sold off for 2-3 days. We were at 420 yesterday, we're at 413 today. That's the only catalyst. There's no debt ceiling agreement. The Fed's not saying that they're going to cut rates anytime soon. Stuff like that. All right, so I got into that. Again, take your profits. Like, be mindful, okay? You need to know there is a resistance level up here. It's going to pull back. It's not ripping through it. There's no news. There was no news. Now, if there was news, it might be a little different. You take half off, you take a quarter off, and you see if that news just slices these levels and you're on your way to a home run trade. But there was no news, all right? You got to think about this stuff in real time. As the ticker's ticking, as the time's moving, it's a lot easier than it sounds. And this is why everybody feels, and they think that you can't make it in the market. You can't make no money. It's funny to me. It's because they don't have an education. They don't have an education. Anyway, my point. I've had 2 losing trades this week. 4 or 5 winning trades. And my losers are a hell of a lot smaller than my winners. So you tell me what makes sense. All right? Now, if I wasn't taught this, if I wasn't taught how to do this, I don't know, I might be one of the statistics. And I'm on the wrong side of the trade all the time and I give up and then I'm done with this. No, I put in the work. I got trained. It's what you have to do, guys. You have to. Don't be ashamed. Invest in yourselves, okay? You have to. Especially if this is something you want to do, you got to put in the time. You need to get educated. I just taught you a really good lesson there about us ripping up off of just a technical reason and no news, and knowing that because there's no news, it's probably unlikely we're going to just break this level the first try up there. Like, just knowing that. So, if someone doesn't tell you those things, you're not going to know. You're not going to know. You're going to be a statistic. You're just going to lose your money, and you're just going to have this whole scheme of the stock market. You can't make money. You make money one day, you lose it to next. No, you win more on your winners and you lose less on your losers. I am a proving fact that that's what I do every day. All right, one trade should not dictate your portfolio. You should not get blown up on one trade. If you're putting your whole income, your whole portfolio in one trade or half of it, chances are you're not going to make it. You're not going to make it because you're going to put too much pressure on yourself and you're not going to be able to read price action right in real time. All right, so I'm going to get off of that. I do have a mathematical equation for risk management. It's a pretty basic one. It's not percentages. Again, because if I'm trading the SPY and I risk 2%, if I say I'm risking 2%, I'm going to risk 2% of my portfolio every time. For every trade, I'm going to at least risk 2%. All right. The SPY is $400. All right. We'll just say 400. Now let's go to Chipotle. Chipotle's, let's just say 1,000. So what's 2% of 400 and what's 2% of 1,000? All right. Again, another lesson that you need to think about. That's my point. You need to know what you're doing. It's important. It's important if you want to make it in this game. It's the greatest game alive. And you have access to it. A lot of people have changed their lives in more ways than none because of the market. It has allowed them to be able to become other things in life and set them up. How many people bought Apple back in 2009, 2010, 2008? And I guarantee you all those people were probably able to give their kid a down payment for the house, if not buy their kid a house, or go on those trips and have their retirement because they did the smart thing. It's important, and it's not instant gratification either. You got to think of it as just compounding interest. Compounding interest that has a snowball effect. And I just hate to see people that don't know what they're talking about and just think that it's a scam, this and that. Well, I'm not having any issues over here. I'm controlling my losers. I'm not sized up. And when I do put my foot on the pedal, there is a reason why. And those trades are not losers. They're winners. Because I know how to read the market. I understand what the catalyst is or isn't. Just knowing if there is or if there is not a catalyst alone is a big part. So I'm gonna move on. Let's go to the SPY, guys, and then I'll go to the Nvidia. We'll go through Snowflake. I'd like to get Snowflake at a good number. I'd like to be able to put that in the long term because I think 10 years from now, 10, 15 years from now, Snowflake's, there's just something about it. I also like Oracle, but I missed that boat. Oracle's been around for a while. There's just something about Oracle that I like as well. But the thing is, Snow is young. They just IPO'd a couple years ago. I don't know much about their business model. I think they do they kind of do like what Oracle does, like cloud space, I guess, stuff like that. Maybe stuff for like working and stuff. I'll have to look exactly. So, all right, let's go to the SPY. Let's go to the daily. So what I've been telling everyone, what I've noticed, okay, you guys got to go back to the weekly charts for a couple of reasons. All right, give me 1 second. Use the restroom, and I'll be right back. All right, y'all, I'm back. So I wanted to just go over the S&Ps real quick. We have this 100-day, guys, is a brick wall. Look at the rejection off of it. We'll go to the daily and look at yesterday's volume versus today's volume. We noticed we had some sell volume yesterday, obviously. Um, so I want you guys to pay attention to that. This 100-day is very important on the weekly, guys, because what I'm saying is I think if for some odd reason we get up and break this and hold it, that's when you guys can start talking about 430 this and 430 that. All right, we don't get above the 100-day. Don't even think about 430. Don't even think about it. All right. So I just wanted to bring that to your attention. Let's go to the daily. All right. So look at this volume, guys. 1, 2, 3. Look at the buy side volume here. If you can't see it, I'll try and make it better for you, or bigger for you. All right. Look at that volume, guys. It's important. These are just part of your tools that you need to read, to be able to read the market correctly, and know like what's going on, so you can put yourself on the right side of probability. That's all it's about. If you're thinking about going long, ask yourself, what are you going long for? Why are you bullish? Look at that volume. Look at that volume. Look at that volume. I ain't touched no green bars. One. I touched one. All right, one bar. So, but yes, if you see over here, when you get to this area, you need to know what to expect depending on the catalyst. That's another thing, the catalyst. What is the catalyst that brings us... God damn it. I said got, with G-O-T, not G-O-D, by the way. So if we get down here, what's the catalyst that's bringing us down here? Does that catalyst bring these buyers back in? Are they still sitting there? Or is the catalyst bad enough where these buyers are like, you know what? This catalyst is pretty bad. Like, things are pretty bad right now. You might not see them till here, 350s. Honestly, I don't know if the market's going to give you that. Like, if we get down there, we got probably bigger problems than money. That's for sure. There's more issues than money, honestly. That's how I feel. Maybe the market does get it. I'm going to tell you right now, the market gives you 350s, you better take it, because you will never see those prices again. If we get down to 350s, like, look, you're going to notice it. Even if we get to 360s, high 360s, you're going to notice when we get there, buyers are stepping in. They're grabbing it as it's going. They don't give a shit what the catalyst is. All right? And that's what you got to think about. What's the market going to give you? That's one thing I've always noticed about the market is like, man, I missed that. I don't think the market's going to give it back to me. Like, that was your chance, and it's not coming back. You can just kiss that goodbye. All right? So, these are all the things that you need to know, that you need to get educated on to be able to be successful in this business. People, I swear to you, just, they assume, they think they know what they're doing. Whether it's a selfish, like, just, they think they know it all or something, but yet they really don't. I mean, guys, how do you think the biggest banks in the world are like they are? How do you think companies get to where they are? Ask the people that bought Apple and Microsoft and Tesla and all these other things. Ask them if the stock market works or not. Ask them. And it goes on to things like, why are you in options now? Like, do you know, like, where the VIX is? Like, do you know, like, are you expecting, like, a move, like, that's crazy? Because that premium's is already priced in, a 1.5% move. Like, you gotta think, like, it's all that stuff and more, guys. The lesson I gave you about going into resistance and catalyst, no catalyst, along with the premium. Did you notice the premium was up today because the VIX was up? All right. So I also said that I was thinking, again, it's not financial advice. When the VIX was at 15, 16, if you didn't just grab some longer dated puts just to get it, I don't know. If you had an education, you would know, like, things like that you should probably do, because even if the stock kind of moves against you or just sits there, and you get like a nice drop or something happens, the VIX is going to shoot up. And even if you're in the money or not, depending on how far out the money you are, that premium's just going to go way up. And you've seen it today. The premiums were expensive. We were up here, premium was pretty light. You had your chance. If we get a bounce, think about that again. Just watch the VIX. You got to watch the VIX. Even if you're trading stocks, watch the VIX. All right, it's 11 o'clock. I got to hurry up, guys. So the S&Ps, again, these 2 wicks here are your 100-day. Or these three days. This is pretty much your 100 days up here. I'd have to look at the price. But the 100-day moving average on the weekly chart. All right, it's right there. It's a brick wall. It's a solid brick wall. I've said it. I said it all week that's a brick wall, and it's going to take a catalyst to get through it. We're not just going to just cozy on up like, everything's good. No. I've given a lot of reasons why I think that we see some more downside, potentially. We could see some more pain, coming in sectors that nobody's talking about. Nobody's talking about the Russell 3000, the Russell 2000 companies that are small cap companies that depend on the bank for their daily business expenses and payroll. Like, they don't make money. A lot of these companies do not have positive cash flow, let alone cash flow at all. Because they're starting out. They went to the market to raise capital, to build a business, to grow that business. All right? That ties in what the market is. So things could get a little dicey, and I don't even know if it's going to come from the banks. I think that's where I think you're going to start seeing companies like run out of money. They may run out of money. Now, what's the Fed going to do about it? I don't know. Do they ease tightening lending standards? I don't know. So we'll have to wait and see. That's something they might want to think about, and I know the Fed knows about that as well. So we did have a nice bounce here, guys. We were on that. I was on it. So right now, again, I thought we would stick a range here for a little bit, but like I said again, and I said it before, the closer we get to June and there's no deal for this debt ceiling, the market's going to start pricing that in. And it's doing it now. Look at that. And 1, 2, 3. Do you know how much money, if you would have bought puts up at that 100-day and bought them a week or two out? Just go look. Go look for yourself. So you got to think about that stuff. All right. Let's do it. Let's go to NVIDIA, guys. Let's go to NVIDIA. I'm going to pull up the weekly, then the daily, so we can get a grasp. I have so many of these levels up here. I'm sorry that it just gets congested. God damn, this is insane, guys. Huge inverse head and shoulders. Huge. You have not had the 50-day cross the 100 yet on the weekly. I'm sure it has on the daily. But, man. Unbelievable, guys. Unbelievable. You got to start thinking to yourself, like, like, do you get a blow-off top type day with NVIDIA? I don't know if you do. It's a large cap. I doubt there's, like, a ton of short sellers there, but this is insane. Like I said, even if you bought it here, this year you're up almost 300 or 200%. 200%. You've doubled your money in 6 months. 7 months, whatever. Anyway, so I mean, it was. I guess if you know about the markets, like if you seen this AI wave coming when it started, like I was seeing articles about how, like they compared it to Facebook, they compared it to a lot of other things, and it mentioned that the amount of time and users that AI had created in just 1 week compared to Facebook and stuff that took them a year or so, it was pretty staggering. Those numbers were really staggering. So I can see why this is doing this. And whoever was on there, like just seeing that article, putting 2 and 2, like this revolutionary thing coming, these boys got paid. They probably aren't selling anytime soon either. Even if it pulls back, they'll probably just buy more. I mean, guys, this is what we got to look at. I have a level there. This is your, this is the 2 pivot tops that had tails prior. Around October, whenever. So I would watch this 2 pivot top here, and then, 346.47. All right. Oh no, I have. Oh shoot, I'm sorry, y'all. Let me actually delete that because I'll forget about it that it's there. So 346.47, gang. Come on. There we go. All right. If you break above that, I mean, hold on, hold on. So, um, these earnings weren't that great either. Again, Nvidia is trading at 100 times earnings, and I said this in the live stream that that's pretty much 10 years of cash flow priced in. So what that is telling you right now at 100 times earnings. Now, if you don't know anything about interest rates or the math of cash flow and how it all works, I'm getting some things together at a price that you probably won't believe me. So it's going to have all that. You're going to have all that. You're going to know how to read the markets, and it's no games, options, all of it. And I don't want your information. I don't want anything. I don't want your information. I don't want to sell you a whole bunch of other products, this and that. No, I just want you to learn how to trade. I want you to learn how to read the markets. I want you to learn how to lose. I want you to learn how to lose so you can make winning trades that actually matter. Okay? Not falling behind the wayside. Struggling. Two steps up, 8 steps back. No, that's not how we do things. All right? I don't know, guys. I would just watch the all-time high. You get above it, there's no price action. So, you just hang on, see where it goes. If you're in Nvidia, if Nvidia does get upside tomorrow, just take your profits. And again, only experienced traders should be trading that, guys. If you guys are new, don't trade it. There's other things you can trade in the AI sector that aren't as much. And if you do decide to trade any of them, there's going to be enough volatility that you don't have to position yourself to the gills. You can put on a little bit of a position, and I'm going to tell you right now, if you're on the right side of that position, it's going to pay you handsomely. I assure you that. If what I am I'm not expecting it, but these are the things that I'm going to look for, So I'm going to bring up AI and stuff. So these are your levels. I can obviously get rid of this one. All right, let's go to the 15-minute chart and stuff, or no, the daily. Even though it's above all moving, your average moving averages. Sorry, guys, sorry. MACD did put in a look at this though, guys. It may be running out of strength, but you just had the earnings, so we'll just have to wait and see. They are not. When you see something like this, you're seeing the buyers are stepping up. Buyers are stepping up, guys. All right, so watch the all-time highs there, guys. Let's bring up AI. All right, you got somewhat of a triple top. What are we going to do here? Let's just go to the weekly. I'm just going to go to weekly just to see where the averages are and everything. So look at that, guys. Look at that. Okay? Look at that bounce. That's a double bottom off of the 50-day or the 50 weekly moving average, guys. This is not coincidence. This is not coincidence at all. All right? This is institutions and short sellers seeing this level on a longer time frame and saying, yeah, we just held the 50-day. We just put in a double bottom. We tailed right at it. It didn't even close below it. That's another thing, guys. Where did it close? It closed above it, and it closed above it. Above it. The close. The opening price doesn't really matter. You need to pay attention to the closing prices. All right, closing prices. So I'm going to obviously put a level here at all-time high. That was the gap up tail. I need to make it a little big because it's obviously like an area. Okay. So these are the things that I do that you can probably start doing. I like to put rectangles where the area is, because usually it's an area of resistance, not one price. It's an area. And I hope you guys find this video useful. If you do, hit the like button, maybe subscribe. You know, good karma goes a long way. So I'm gonna put that there. It could be red or green because we don't know yet what the hell's gonna happen. We do have. Let me see here. No, I'm on the weekly. Shit. I wanted to be on a daily. But anyway, so we know the 50-day held on the weekly. Alrighty. Alright. Look at that 200-day. See, this is what I mean. This is using indicators that match up on different time frames, guys. This is the basics. Held the 100-day on the weekly. We held the 200-day on the daily. You know, knowing this stuff can make you money. It's not breaking. Matter of fact, it went up and it tested again. After that second test, guys, I would have been long this thing. And guess what? We were. I did play this. I played this back here and here. I played it twice. We played it twice, guys. Yeah. It was here. And I think it was here. It wasn't here. I haven't played it recently. It was here. Here and here. When we broke up to new highs. That's where I played it. Oh, man. I mean, I'm not worried about it because it's a whole area, you know. Let's see here. That is an open and close. That is a tail right at it, right? No. Oh, the rectangle. I got to remember to change them. All right, guys. So this is how I do my technical analysis. I'm going to look at levels, but I want to put a level here real quick first, though. All right. Right on that tail. See this tail? Wicked right off of it, okay? Could not close above it. The close. Look. Closed right even here and here. Closed below it. Closed below it. Closed below it. We opened up higher, but you closed below it. You're trying to get up there. You're trying to break this level, so that tells me it's important. This 28, 55, whatever it is, 28, 47, call it 28.50. It's important. You cannot like end the day above that level. Now, NVIDIA earnings might send you there. All right, NVIDIA earnings might send you there. All right, so we got that. Now, what we want to do, at least on the daily chart, we want to look at a couple things. We want to look at our volume. All right, a lot of selling up here. All right, that was just a day of probably everybody selling this run. And still had some on that run. They were just getting out. So this volume here, I'm not going to say not to pay attention to it, but you probably just had a lot of profit taking with a lot of stacked orders short selling on top of that selling, just like a short squeeze. So you kind of want to think about it in that aspect too, guys. You know, there was just a lot of profit taking and a lot of short selling. Let's see here. We got a triple bottom. Look at that. Support resistance. That takes me right under my other level. I just don't know if we gap up tomorrow or not. Well, I see that this is here now. I'll worry about that tomorrow. I'm not going to put that level down. I'm sure it's important, but it just doesn't mean anything right now. So, All right, that's my, I'm going to be honest with you, 49.50, and, man, 73, though. We ain't going there. We could, but, and 55, I'm calling it now, okay? If we do break above, you're going to want to pay attention to those levels, guys. All right. Okay, that is the wick top right there anyway. So if we break this wick top, just watch out and hang on, guys. You might have a short covering like no other. Do you guys remember on CNBC, the guy that was on CNBC talking about shorting, or like, you know, he said he was like shorting AI, or was just going on, and like he worked for a short report, Hindenburg, I think. Don't quote me again. It may not have been Hindenburg. But he works for a short report company, and what they do is they do work. Like they pretty much take everything that we have, like Google Maps, addresses, everything, and they go to work. They say, they go to the buildings. Okay, they look at addresses, like what they want. They just find out They dig in with by them, they just dig into the company and see if they're really really doing something. Like look at the stuff they did for Nikola. They used Google Maps to see this stuff that they had nothing going on at the warehouse that they were talking about. They had this going on and that going on. Come to find out, it was bullshit. They didn't even have not. They had a couple solar panels on their building, and it was pretty much like an empty building. So, that's what those researchers do, and they do a lot of work. It's actually like probably fun work that I would be interested in one day. You gotta be a critical thinker. You gotta be able to use the information that you have and go to work. Just like a doctor does. The doctor takes information from the person and tries to solve the problem of what is the issue and how can we solve the issue. So again, it's the closest thing that you can get to being a doctor. All right, so we went over AI. Yeah, guys, just watch. We're gonna see. We'll see where this thing is at tomorrow. Nvidia. You have AMD, and then I'm gonna get into my trades real quick. Oh, sorry. Let me go to 15-minute. Because I got to get some sleep. I've been working so damn hard on, like, just learning so much stuff on, like, websites and design and all kinds of things. And I've just not been getting any sleep. What was I going to say here? Daily. So let's go to the 15-minute chart. And we are on an obvious uptrend, guys. So let's get into the technical levels. All right. First, I'm gonna take pre-market off, and then I'll turn it back on. You know what? I don't need to do that. So far, I mean, between volume and stuff, the volume has picked up, guys. On the buy side, it looks like too. So it's going to be really interesting to see what we do tomorrow, guys. It really is. Should be some good opportunity. What I would first start with is putting in the high, the close, and the low. I wouldn't worry too much about the open. I mean, you can because, I just worry about the close, the high, and the low. Unless the opening means something, but I don't really think it does here. I mean, you have the low of the yesterday, but like I said, man, we may not even test that because of Nvidia earnings. Like, look at it. It's already, people already positioned themselves this afternoon for tomorrow. So be cognizant of that. And you'll notice as this thing goes, depending on tomorrow, you wake up in the morning and this thing's gapped up, look for them to take some profit. Now, you need to know what the difference is between profit taking and selling. All right, there's a difference. There's a big difference there. All right. So that's what I'm going to do. I will put this here just because it may come into play. All right, I'm going to look for that level. So you can write this level down, guys. This level here is 29.20. I have it around 29.22. So call it 29.25 in that area. The post-market low of tonight. We can go over AMD and stuff. I have a nice lesson on AMD or on Apple that I want to go through with you guys that you guys can use. You guys can use it as of tomorrow. Like, look at this level. See, this tells you guys, look, I've had these levels up. What happened? Resistance. Had a catalyst. Nvidia earnings. We broke through it. Where was the next resistance? Right at the other target line I had. Now we sold off, and where did we find support? Literally right at the same exact position that I've had my resistance. I have my support and I have my resistance. Now you need to know how to do this, or you're not going to be able. Like, your line might be here. Like, you go to, you're like here. Oh, look, it almost came support, or right here in the middle, and it just whipped through it. So no, you guys got to know how to read the charts, guys. It's important. You should be able to put levels up, and them levels are sticking. Like, look at that, guys. Self-explanatory. Like, this tells you you're doing something right. That is a key resistance, broke through it. At the second, I'd call that resistance number 2. Now, whether it's a minor or major, I have to scroll left and look. And this is for AMD. And then we pull back and find support at the previous high. This is a beautiful setup. I love these setups. Especially look at the decrease in volume. If this was 9:30 in the morning, I'm going to tell you right now, my ass would be long, long, long. And I'd be selling as we're just getting up. Man, that would be a beautiful... These are beautiful setups, guys. This is setups where your risk to reward. This is your risk. Okay? It breaks down and out. Like, it breaks down, you're out. I mean, you could give it to the initial high, the initial candle high. You know, you can give it like a few cents under it, but your risk to reward, you buy right here at support. It tailed off. You see that tail. So when this is going, there's your 9 EMA, you're a buyer. And this is your risk right here. 116.61 will go down a few cents to 115.54. You're risking about $1, right? 116.50, so we'll say $1.50. You know, to go where? What's this? 123. So you're risking $1 to $2. We'll say $2 to make 17, 18, 19, 20, 21, 22, 23, 24. You're risking $2 to make 8. 2 to 8 ratio. And if you buy correctly, and if you know, you're not even going to have to worry about getting out because you know that that's going to be support. There's a catalyst. But you have to know how to read that catalyst, guys. If you know how to read the catalyst, it makes trading easier. And you're not sweating. You're not wondering if it's going to do this. Or you can start making up different plans. Guys, $2 to 8. Sorry. That's a 2 to 8 ratio, guys, for tomorrow. All right? This stuff is so important because it can change your lives if you know how to do it. I'm like so serious. And I'm just giving this a few cents below the initial candle. You could give it here. But still, guys, like, just give it here, get out. If it starts curling back up and has volume and stuff, then that's up to you. You do what you want. But this is what I do. If this trade doesn't work for me right here, I'm just sitting back. I tried to put it on. It didn't work. I knew when I got in, I was risking $2, $1.50 to make 8. And I'm going to tell you right now, you get $6, $7 a move on AMD, you're getting about 300%. All right? And you're only risking $1.50. You know, you might risk on options, I don't know, $15, $10, $20 to make $200-300. This is how you make money in the market, guys. This is how you make money. You need to learn how to do this. I had my uncle earlier say to me, you don't know how to make money. You can't make money in the market. No, you can. You don't have an education. You don't know what you're doing because you're not putting on trades that you're risking $1.50 to make $8. That's where you're wrong. And not being able to read the chart and say while you're in the trade, not making up different plans. Like all of a sudden you had a game plan and now you don't because you put too much. You're sized up or your mind's going. Even if you don't have size on it, you start thinking like, could it do this? Could it do that? Listen, if it hasn't broke that damn level, it's holding. You wait for that level to break. That is it. All the little ticks in between, don't even worry. Like, you just don't even look at it. You can set it on your phone, on your computer to get a notification. You can go look at another stock. That way you know if you get stopped out, you've only risked $1.50, $2. You can make trading easy. You can make trading easy. This is what I do. And I laugh, and it bugs the shit out of me when I hear people say the stock market is a scam. No, because you don't know how to trade setups like this. Again, trade line. You're buying at trade line. There's a reason that the 9 EMA is there. All right, it's going to be in the courses. It's so important. You guys just you just wait for that one. Again, we're just sitting on this prior resistance becomes support. You know, that's another thing too. Once resistance is broken, it becomes support. All right? And there's a psychological reason why that happens. That has to do with buyers and sellers. Okay? Again, you can give it the initial morning candle. Or not the initial morning candle. I'm sorry. I'm sitting here acting like it's the morning. So look, guys. Here is the resistance level, or support. I mean, this is your support. This is prior resistance. Boom, it tried. It couldn't get above. Boom, look at that. On an increase in volume. You can't see it because it's low. Increase in volume. What happens? Support. Resistance becomes support. What do? We have, God damn it, we have a bull flag right here. Boom. Boom. Where's your stop? Right here. You break down and out under this support level, you're done. You let it go. You want to give it to this? You want to give it to that candle? That's fine. That's why I put it here. I've give it a few cents under it. I'm going to give it a little bit of room. Now, I would probably give it to be definitely wrong, guys. What I would do is I'd probably be giving it this right here, but I'd have to do the math. See, I'd have to do the ATR. All right, do you know what an ATR is? Like, do you know when you're playing an individual stock what the average movement is, and then price in some volatility if that stock is in play that day? What it does then? Like Tesla. I know Tesla is good for $4 or $5, on an average day. But when Tesla gets going, I know I can get $8 to $10 out of it. Like, that's the difference. When Tesla's in play, it offers a $8 to $10 movement. When it's not, okay, base hits, guys. I know it's going to at least give me from a range $3 to $4. So again, these are the setups you need to succeed. All right, people's lives change every day because of this, but they don't know how to they don't know because they're not educated. They don't know this is where your risk is. You don't make $400 the one day and then lose $400 doing this the next. No, you're giving up $1.50 to make $8, and you have a catalyst. So guess what? Now there's a 75-80% chance that level is going to hold, and all the other buyers that are there are going to be buying. Damn sure. Look at them. All bought on the 9 EMA, and guess what? The stock never broke the 9 EMA or that level. All right? So it's important. Guys, I take this stuff so serious because I know what it offers. You just can't change your mind in the middle of a trade and get psychologically worn out that you're not in the trade, and then 5 minutes goes on and the thing is running without you, and you're like, man, why did I get out? And you're just sitting there watching it run without you. You're seeing all your people on Twitter, YouTube, $1,200 day, $16,000 day, $80,000 day. All right, because they stick to the plan. They see the setup. We all see the same setup. Why is it that some people win and some people lose? And you know what? There has to be a loser in the market. What side are you going to be on? Because if there ain't no losers, there ain't no winners too. So again, it's okay to take losses. You just need to know the setups, because this right here is what makes it mathematically possible for you to become profitable. This is the mathematical equation. Risking $1.50 to potentially get $7, $8. Taking profit at 5. Taking another load off at 6. Taking another piece of profit off at 8. And then just selling the position and leaving a piece on. It's paid for itself. It's paid for your steak dinner. You've had a great month, and you're just going to let the last few pieces just see what they do. Or don't be greedy and take it off. This right here, guys. So no, don't tell me you can't make money in the markets. Don't tell me you make $400 one day and then lose $400 the next. If you lose $400 the next, you shouldn't be trading. I'm gonna tell you right now, we love people like you. People like the people that wanna risk and lose what they made the same day, the prior day, the next one. Guess what? We love you because you feed us. You feed us because you don't have an education and you don't know the math. You don't understand how the markets work. All right? And guess what, guys? That proves my point right there. If anybody tells you that the market is a scam, or that you lose money, you lose all your money that you made the other day, you win and you lose, that right there is proof on the winners that actually make it because they are good at losing, or they are good at winning and even better at losing. That right there. Look at that level. So I'm going to tell you right now, these levels were already drawn. I didn't come in here and draw them. They were already drawn. Chances are that level is going to get hit. And I'm going to be selling right here. I'm going to be selling right there. Or, you know, my first piece. What would I do if I was in a trade and this was during the day? All right? What would I do? Let me ask you that. What would I do? I'm going to show you what I would do. If I was in a trade like this in the morning and we start curling up, I'm taking a piece off right at the 120 high of day. Because I know this high of day is resistance. I take a piece off. That piece is a 25% piece. It's a 10%. It's a 50%. Maybe I'll lock in profits because it got there quick. Maybe I just take half off. I take a quarter off. That quarter off has already paid the position. So now there's no way at 25% taking off at the high of the day on 117 to 127, 8, 9, 10 on a $3 move. You just made 3 to 1. And that 25% covers your position, and you probably even made money. So you can just do whatever you want with the rest. My second take profit. Where's my second take profit? We grind up. Come on. Above the high of day. It was resistance. I take a piece off because it's the high of day. There's going to be resistance there. All right. People are going to be taking profit. The psychological aspect of knowing what traders do while they are trading and understanding what they do can help you do what you do. All right. High a day. I got 25% off. That's a $3 move. That's paid for the position and I'm green. We break the high a day. Taking it off on strength. There's another 25%. Now I got half my position at damn near, what is this? On the break, 21. So there's another $4. And right now, just half of my position, I've risked $1.50, $2. We're going to call it $2 to make $4. That's 200%. All right? That's 100%, I would say, of profit. All right? Second piece of profit, call it 75% in front of that level. Now I'm sitting back. I want to see, do we break this level? Because I'm good. I'm good. We've got the steak dinner. We're feeding the family. You had a good day. Like, I'm sitting back. You know what? Depending on what they are and how fast it got there, I might even just go ahead and take not the last 25%. Maybe I take 30 or 40%. Now I got 10% still on because I took 25 here before, like, going into high of day. Or at, you know, if you want to take it at high a day, you want to put it just under because there's orders. There's orders stacked. Okay? I am in there. My orders are stacked and pre-planned when I'm in a trade. Just like yours should be. So we've taken profits off here. We've taken 25% off. We take the other 25% off through the break. Through the break, guys. We get up to the level. The stock comes up high a day, right? We break high a day. It pulls back and holds it right here. It's going to pull back and hold it, and the shorts are going to get shaken. The buyers are going to just continue to step in because they've seen the high a day has broken, and now what was resistance becomes support. Okay, we pull back, high a day holds, and we extend, and we extend, and as we're extending, I'm taking profit into strength. It's that easy, guys. And you just make it difficult when it gets to your head and you're either too sized up, you have too much risk on, or that should be the only reason why, or you don't have time, and that's okay. You don't have time. You haven't been taught how to take a trade like I just showed you. Why are you taking the trade? Why? What is the reason for the trade? What are you wanting to get out of it? Do you know AMD's ATR? Do you know where your daily moving averages are on the daily? You know? Like, this is it. This is the work. You know? And I want people to see this who think it's not possible. Because I was taught this. I didn't just come up with this scenario by myself. No, you just don't do it. You're taught this. This was a good lesson, all right? This was a good lesson for you guys to take in. Again, I'll go through it one more time, all right? We held resistance. We popped up to resistance. See the small pullback? That's profit taking because they know that it's resistance. They had this level up there too. All right? This is my stop loss. This right here, this red, I'm going to make it red or pink or orange or whatever. This orange, that's my stop because I'm giving it to the initial the actual candle where it closed and where it opened. Like that's not so important as that. But I'm going to give it a few cents because stocks, it's not just one specific price. It's an area, okay? So we have the breakout. All right. So we know we just broke out, okay? I am expecting another pullback just like we pulled back here. Expect another pullback to make this resistance area an area of support. An area of support, and right here is where you're buying. And it's difficult for people to step in and buy on weakness, sell in strength, like I'm telling you. But you got to look at the tail. They were buying. They were like, we got a catalyst. We got this. We got that. So there's probably going to be a gap up tomorrow. But if this was in the morning, this is a perfect bull flag. You're risking $1.50. We'll call it 2. It's more like $1.75, $1.50. But we're just going to call it 2 because we know we got $8 of upside there. And from here, when I'm buying at resistance, guess what? I'm losing less because I'm actually buying it here. But entries are also important. 116.33 to 115.45. I've even made it even better because I did get in the position when it gave me the opportunity, and I didn't think my way out of it. I didn't think my way out of the trade. So buying at the right locations minimizes that risk. You want to wait for the bounce? Okay, well now you're risking from the bounce to here. Now you're risking 117.46 to 115.60. All right, instead of 116.23. Or seeing that tail hold, getting into the next candle. Like, you guys got to think about that stuff. Just make it easier on yourselves. All right, so we're buyers. Resistance broken. We know resistance becomes support. All right, and what are we doing? We're looking for the high of the day. We're looking from where that pullback happened. We're looking to take profit in front of that area. We're going to take 25% off because this is already a good this is already, we're already from 16, we'll call it 17, 18, 19, 20. We've already got 3 to 1. That's a 3 to 1 risk trade just going to the initial high. All right? We got 25% off. We pull back. Pull back just a little bit, We start calling back up and we break it. All right? Another 25. We take another 25 as we're breaking through it, and you know what happens when you break the prior high. It just goes, and you want to sell in that. We got 50% off. Now, again, the position's been paid for. We're profitable. We're already having a good day. And then we start getting up to the high of day, and we're selling into strength, buying into weakness. All right, buying into weakness because we know our risk to reward is even better now. Even better. And we're taking it off, You want to not take 25, or we take 25% off because we got 25% of the position off at high of day. We break high of day, we take the other 25% off. We're at 50%. Another 25 or 30 or 40%, lock in those gains. Leave 10% on, 15% on. Don't leave any of it on. Go call it a day. You had a great trade. There's a book, and the title of that book is One Good Trade. And that right here, during the day, what I just brought out for you, is how one good trades happen. All right? All right, guys. I'm just going to call it a night. Look, I'm going to show you. I guess I could show you guys real quick. I was short Apple today, guys. Guess what? Everybody, I'm not a computer. I try the best that I can be to not be a computer. Um, let's go to the 1 minute or 2 minute, whichever. It don't matter. So I was short Apple today. I was short right here. All right. Why was I short? All right. So I'm drawing this out. I'm drawing this line right there. Okay. So at first I'm drawing it right here, just like I did on the other one. What is that? That is a bull flag. What did I just teach you guys about bull flags? They present the best risk to reward. Okay, this is already drawn out with this and that. So then we have this here. Stocks curling up. What is that? What's that yellow line? That's the 9 EMA. That is our trade line. That is our trade line. The trade line is so important. What happens at that trade line? Sellers. I could bring in the volume. You know how Apple is with volume. I'm not even going to worry about it. So anyway, I'm looking at volume. Like I always do. I use the tools in my toolbox. Okay? Look at the volume. Dude, this is crazy. This is why I hate like Apple and stuff like that. For these reasons, I hate like their volume is like so like this. It's crazy. God damn it. Sorry guys, just hang. There it goes. There it is. I thought I had it. Alright guys, so this was the trade again. I took 2 trades. 3 trades. You caught the SPY when I put that up. If you guys need me to give you the amounts, it was like just under 20% profit. It's like I took a piece at 14 and I took a piece at 21. That's what I do. I sell in the strength and I buy in the weakness. Alright, so we've made this here. Alright, and we are coming down. So there I can already draw because I can see what it's doing. I've been doing this for a while. I can see what it's doing. And we're coming down, we're trailing. So I'm thinking, okay, this is the initial morning high right here. That's your initial morning high, that tail. We've broken that. So I'm thinking, am I a buyer or am I a seller? Because usually when support breaks, or when resistance breaks, it becomes support. 2 things. All right. Let's go to the Fibonacci. These are the tools in your toolbox. All right. And this is why I had a form of risk management, because I was a little unsure of what was going to happen. What's this? That's your 38.2. This pink line, that's your that's your VWAP. What's this yellow line? That's your 9 EMA. So we have 3 indicators, not 3, but 4 if you count this support. There's support here. This is why this red thing is here, because I had already in the morning planned on selling in this area. It was resistance. So again, or it was an area of support that broke. Now I'm looking for it to become resistance. And that's why I was ultimately short for this trade. And I start thinking, well, the S&P, all right? Let's look at the S&P at 10:10 a.m., all right? We're going to do it like this. We are going to do it like this, guys. And I'll even put up the same, 1 minute. All right, 10:10. What's the SPY doing? What's the SPY doing at 10:10? SPY started to get a bounce there, but you don't know that because none of this is there. You know, none of... I got you guys. Hold up 1 second. Okay. Just bear with me. We'll just do 10:11. That's fine. None of that is there. So what do you see? What are you seeing? What are we seeing here, guys? What do we see? Shit. I don't want to... What are we seeing? I know it's a little packed, and I'm sorry. All right? What are we seeing? I'm going to tell you what we're seeing. We're seeing Apple have relative strength. Apple's going higher. Tried to find out if there was news. Didn't think there was, or at least I didn't see any. But the S&Ps are selling off. S&P's selling off. Apple's going higher. So that's messing with me a little bit. So I said, okay, at this point right here, we're coming to the bottom. And I'm not a buyer, all right? because I'm conflicted. The SPY is going down. We have the debt ceiling. We have all that stuff. I don't have news on this. All right. I'm gonna give you my timestamp just so you guys know. I can do it in my. I don't even know where my phone's at. I'll give you guys my timestamp if you want it. I just gotta log in. I can log in through here. Just give me 1 second. Come on. Of course you spelled it wrong because of my screen. Alright, let's go to orders. Where's the time? Guys, 10:12. I was short at 10:12. And I'm sitting here thinking, I'm like, guys, please be close to 10:10. Like, I know what I'm doing. Well, this shows me that this is what I'm in because none of that is there. None of that stuff's there. Alright? So I got it executed for a buy at 74 cents, or that's with commissions and stuff. So 10:12 right here. All right, 10:12 a.m. 5/24/2023. Order number, price execution 74 cents, commissions, fees executed 10:12 a.m. 5. Order number 1263. All right, order number 1263. All right. If I knew how to, I just don't want you guys to see all the amount that I bought because I don't want anybody to feel some type of way like, man, I gotta buy 10, 15 contracts. You buy 10, 15 contracts and your ass can't handle it, and you see them numbers flipping through the screen, and you can't handle it. It's a good way to lose your money real quick. So, all right, let me see here. All right, I'm going to show you guys. So this is proof that being educated and knowing what you're doing. You hear me talking about 10:10, 10:05, 10:10. Where is that, bro? Nailed it. Right there is 10:12. The breakdown and out. Now I know I'm looking for VWAP. Where's my stop? And I'm going to get into this. I'm going to show you guys real quick. Let me mark this up real quick. Okay. Damn it, come on. Just give me the time. Okay, I got all that. Strategy. Order placed. 10/12/5/24/2023. Order, execute, order, status type. Alright, guys. Let me know if you guys can see that, guys. What does that say? What does that say? I don't know. Alright, I don't know if you guys are able to see it, but I'm trying to do the best that I can. Alright? So you see, 10:12. I was in Apple short 10:12. Why? Why was I short Apple? I was a little leery. Now this is going to go into risk management. You can do risk management in all kinds of ways. So first off, I know at roughly this initial morning high, we're going to get a pullback. Matter of fact, in order for me to feel better, I actually want to test this pennant. I wanted to test the uptrend of the flag. I want to test that. That is a break, a retest, boom. So, what happened? 10:12. You just seen it. I was in on the break. I was actually up here at VWAP. See this little bounce back? Alright, I actually took it at VWAP. Literally at VWAP. Why? Because you know what? I was going to give this thing. I said, if Apple closes above VWAP and holds, I will be out. VWAP is this pink line, guys. Where is my entry? Literally at VWAP. That's risk management. So I'm break even if I lose. If not, or I'm green It makes a move, I'm green. You're paying in commissions. That's risk management, guys. Entering and exiting. And you know what? What did I do? What happened? Nope, I didn't get shooken out because I know at most on the first two, I'm going to let this test this line. And if it's not going to be, or if it's going to be a failed breakdown, it's going to go up and test and then just go right up. And I'm already ready. I'm already ready for the little breakout, just in case it is a failed breakdown. But I had a feeling the S&Ps I just showed you, they're trending down. The market is trending down. Don't fight the flow. There was no news on this. 10-12, we're in. There's the bounce. Did we close VWAP? Nope, we closed just under it. Did we close above VWAP? Yes, we did. We did. Didn't sell. Didn't sell, guys. Look at the volume. This is my point. You have to use the tools in your toolbox. Look at this eensy-weensy little bit of buying to shake you out of your position and you lose money and you're selling while I'm buying your position, and 10 minutes later you're looking at the stock while it goes and you thought it did what it was going to do, and it does it. And you did not use your tools because you didn't have an education on how to read the markets and how to do this the professional way. All right? Sorry, it really bugs me when people say that you can't make money, or if you make money, you just lose it the next day. No. Stop sounding like you're a man in a van down by the river. Stop. If anybody tells you, refer them to this video, because it's about math. It's about risk to reward. Anyway, you just saw it. We entered. All right, guys, so we're here. We tested. We put in a double top here, but we still broke VWAP. You know what I did right here at the initial high? Actually, I took 50% of my position off because I'm not emotionally, but I'm thinking like, man, like I would really like to get a breakdown. Okay? Why did I take 50% off? Okay, you see this tail? That's a hammer. That's a good sign, isn't it? That's an inverted hammer candle. That is usually we're putting off the cliff is how I like to memorize it. Look at it though. This was the indecision. That is Apple. See that low volume? Sorry guys. You see that low volume there? I don't know. It's not going to work. But you see it right here. See how low that volume is? You just had a retest. That volume should start to get bigger. So I said, you know what? I'm going to take half off. We've already broken down. And guess what? I'm a short seller. I'm shorted up. I'm up here. I'm taking profit lower. Now commissions come into effect. So, like I said, my one loser was about break even. And that's why. Moving averages, VWAP, levels all converging off a stock that's going higher while the overall market's going down. So that's why I took 50% off, because I managed my risks and I just took some off because I know there's always tomorrow and I know that I could always get back in or whatever. We left 50% on, guys, and we just followed the trade line. So I want to say here on this bounce, because I didn't hold it very long again, I took 50% off, so I wasn't working with much to be able to just like chop that 50. It didn't make sense to chop the 50% off up. But look where it went to though. I didn't miss out much. I didn't miss out on much. So it was fine. I got the breakdown, and that's all I need. That's all you need. Trade number 2. Trade number 2 was the SPY. Alright, I'll have to look. This was an end of day one again. I took it off this double bottom MACD that I've been telling you guys about. I was looking for an intraday one, like a 2-3 day one. So maybe we'll get some more downside and the MACD will come up. Boom, double bottom. I took this. What'd I do? What do we know about resistance? We're selling into strength. Locked in those gains, baby. That's 2 green trades. 2 green trades. What was the loser? Let's go to that. We'll see. We had AMD and a SPY. Maybe it was a SPY. So, let's see. Apple, SPY. Today's the 24th. Um, was that? Oh yeah, the SPY put, guys. I had a SPY put on, and that was break even. Let's go to the flexible grid because I was noticing, we're trending down. These are the market internals. These are I look at these every morning to give me an idea. Are we going to get a trend day or are we not? So on the 5 minute, all right, or no, I was trading it off the 5 minute. Yes. Sorry, remove. I gotta remove that stuff. I don't want a bunch of shit on here. So on the 5 minute chart, you're gonna see this flag, and you're gonna see a breakdown on the flag. Okay. Right here. Was it right here? Was it right there? What was the time? Let's go to the time. It was 11 something. Oh shit, it's not on. 15, 11:15, or no, 11:02, 11:02. Sorry guys, 11:02. Yeah, I thought we were gonna break this level, so that was that. Thanks for hanging in, guys. I'll be back tomorrow morning. I hope you learned something. I gotta go. Stay green, stay healthy. I'll see ya.